Hello viewers, this is Sal here doing a quick video during the day. It's morning time here in California, but it's about lunchtime on the East Coast, and I thought I'd make a video here because it's an interesting time. Today is an interesting day in time for the S&P and any market really. What I'm showing here is the S&P 500, the futures for September. We are in June right now. June 14th, and I'm using a Bollinger Band to show where we are, but we have been oversold. This is a 50 period Bollinger. It's a little wider than usual, and it won't react as quick as the 20 period, but we've been oversold, and we finally have had a decent green day from this oversold level, and we know we're oversold because it's been down quite a bit, and it's oversold on the stochastic indicator. It is bouncing, and we might get a cross here between the two. We have the average and the actual indicator in the stochastic. Once they cross, it should be a good sign of rising momentum. But the question would be, should you buy here? Well, could you buy here? What's changing? Where are we right now? So we've had a strong sell-off, and someone who does buy here would be taking quite a bit of risk because there has been some technical damage to the chart. We have this 1250 line in the sand to about 1240, and we went close to that, and we also took out this 1300 level. So this could rise, and if you're trading unlevered, just dollar for dollar, it could rise from 1283 where we are right now to 1300, or even as high as 1322, and technically even 1345 to 46. And if it reversed, it would still be a bear trend. So this would be this is still sideways to neutral. Those would be your profit taking levels. If it breaks out, then guess what? Then we resume the bull trend. But because it's broken down so much, you have to be worried about staying in too long. So I would actually want to see it rise, and then if it stays weak up in this low 1300 level, get short. But depending on how it behaves, that's how you would trade it. If you have longs, I hope it rises, and if you want to reduce risk, then you'd sell some of those longs. If you're trading the bear moves, and you would probably want to cover your position, and if it rises, then you can start scaling into shorts. But that's how this range is looked at. Maybe you trade it, maybe you don't, maybe you just watch. Maybe you just watch it rise and then get short. Maybe you watch it rise and reduce your position. But just from here, from this low, this level is still quite dangerous. So that's the way I would look at it. It's not, even if the biggest moves will be in a bear market, if this is the beginning of a new bear market in this period, even though we haven't taken out S&P highs, this could be a big move, but then it could give it all back. So be very worried and be very eager to take profits as you create them from this level to where it could go. If it doesn't even go there, then the market is even weaker, which could happen if the S&P stays oversold and this stochastic indicator starts to embed. So just because you see a rising big green bar, try to capitalize if it's appropriate for you, but don't overstay your welcome, because they can give and take it all back quickly. So just some perspective on this type of a move. Take care.